Hi students, today we're going to talk about the final project. You will have a set of slides called final project outline. I'm going to go through it and then do some empirical work, and that's it. It's going to be short and sweet video. The outline, what I want you to do first to talk about your investment, crypto investment philosophy, crypto investment and trading philosophy and trading strategy, coin analysis, all the coins in your portfolio analysis. I'll explain that. Home run coin empirical analysis, I'll explain that. Portfolio analysis, and then your recommendation, which is lessons and that you learn and mistakes, lessons and mistakes that you committed or you learn. Investment analysis, explain why you every coin in your portfolio, why you bought this, why you bought that, and we have a lot of discussion in class, so you can mention that why you did it. Trading strategy, we went through a couple trading strategy. Just if you did some trade based of one of those strategy, what trades you made, why, and what trading strategy you employed, or you considered, or you executed, I should say. Then coin analysis for each coin, I want to say why you choose it, and then when was the ICO, and what type of blockchain, consensus mechanism, proof of work, proof of stake. That's a few things about the blockchain. I can add here, etc. If you want to add, would be great. So far, so good. The home run coin empirical analysis. I want for this coin, the home run coin is the coin that you most invested in. Suppose you have a couple coins and you invested a lot, for example, in coin XX. So you take this coin and you do this empirical political sensitivity, momentum, random walk, mean reversion, movement with gold, inflation, money supply, and all of that. You just done it in the homework. So far, all what you've done, there is no new empirical to do. All of this you did it in the homework. Just you have to report it together. Analyze the regulation sentiment. We've done that too. Now the new stuff that you need to do it is portfolio analysis, empirical analysis, portfolio empirical analysis, I should say, which is performance, risk, and risk-adjusted return. So the performance for your portfolio, whatever the value of your portfolio as you finish the exercise, investment exercise in crypto, whatever the value minus 1 million, because you start 1 million, divided by million, that will be the performance. Then you compare that with the benchmark. In this case, the S&P is the benchmark. Suppose you start investing in a crypto portfolio in January 18, and the S&P was 3,405. You finished in March 8th, and the S&P was 3,615, for example. Then this minus that divided by that, the 3,600 minus this will be equal to the what the S&P return. The risk in your portfolio is the weighted average beta of each coin. I'll explain all of the three. I'll explain in Excel. But let me finish the outline. Then you talk about lessons and mistakes, what lessons you did and mistakes. The final project details. The project is individual. The length 46 pages. The font is a 12 double space. Like government appendix after the report. You can have it as long as you want. And short and sweet. Don't go in cycles. So I'm going to talk about the performance. You will have an Excel file called final project, and you will see a three tabs here. Spreadsheet. The first spreadsheet is the performance. So everybody start with $1 million. So whatever the value of your portfolio, suppose you start your investment in January 18, and it was $1 million, it has to be $1 million. Suppose you finish in March 8. Suppose your crypto portfolio was this number, 1,021,500. Then in that case, your return will be 2.2. Now suppose in you started January 18, the S&P was 3,929. How you get this number? You just go to Yahoo Finance. If you go Yahoo Finance, and you go to the S&P, and you see historical data. And suppose you start in January 18. So January 18 was 3,928. So you put 3,929. You can see it. Suppose in March 8, I'm not in March when I'm recording this video. I'm still in February. But if you on March 8th, you finish your portfolio, you look to the S&P, how much S&P in March 8th. Now, we didn't have the March 8th here because we're not in March yet. But suppose was, I'm just throwing a number, 4,115. Then the return for the S&P will be 4.7. All what you have to put the yellow numbers here. That's all what you have to do. Once you do that, then you get the return, and the return is equal C6 minus C5. C6 is this minus C5, which is this minus that, divided by that. And you have it in the slides, how to calculate the return in your portfolio. Okay, once you finish the return, the excess return in your portfolio will be your portfolio return minus the S&P. In this case, your portfolio, crypto portfolio return was 2.2, the S&P 4.7. Then your excess return negative 2.6. That means you underperformed the S&P by 2.6. Now we're going to go to the risk of portfolio beta. Suppose you have a Bitcoin in your portfolio, Ethereum, another coin called XX, and another coin, whatever you have, and cash. Suppose in Bitcoin you have to report how much in March 8th, as you do in the final analysis. You have to see how much you have in Bitcoin, for example. If you have Bitcoin, Ethereum, and XX, you put how much money you have and the cash. Suppose you have a 10 in cash. Then you have to estimate the beta for every coin in your portfolio. And we have a video how to do the beta. The beta relative to the S&P. Suppose for Bitcoin was 1.2. I don't know what's the beta for Bitcoin. But suppose 1.2, you have to estimate that, by the way. And to estimate this, estimate that. But the beta for the coin, the cash is 0. And then once you do that, then you estimate the weighted average, which is the beta multiplied by 100, how much you have holding, divide by overall. So E4, which is your beta, multiplied by D4, which is how much holding, divided by $8. D8 is the overall. So $D8, so you can, when you do that, you can scroll it down and get that. And then that will be the sum of all of that, all the weighted average betas. In this case, 1.246. And percent, it's, you'd see it 0.257 because here it should be, if you add here another digit, then it would be 57 probably. Okay, so how much, what does that mean, beta 1.246? It means how much you're taking more risk than the S&P. And how we calculate that? F8 minus 1 divided by 1. Why? Because the S&P beta is 1. Your crypto portfolio beta, in this case, 1.246. So what you do is this minus that, that will give you how much your portfolio beta risk, which is 24.57. And if you do it with one digit, it will be 24.6. Your crypto portfolio riskier than the S&P. So all what you have to report is how much you invest in each coin and to estimate the beta for each coin. Then the risk adjusted here. Here you didn't need to do anything. I already done that for you. This number, the performance come from performance C8 for your portfolio. That's a C8 here. So I take these two numbers, they're coming here. And then the beta coming from this one, this number will come in here. And the beta for the S&P 1 by construction. Then the risk adjusted return. The risk adjusted return is your return divided by your portfolio beta. And this case is 1.7 because your beta is higher than 1, then the return, risk adjusted return will be lower. And then the S&P risk adjusted return is equal to the return because the beta is 1. And then the excess risk adjusted return is negative 0.3. Let me go back to the slides. So what we did, the performance, the risk in your portfolio, crypto risk, performance of the crypto portfolio, and the crypto risk, and the risk adjusted return. So once you do that, you add them to the report. And you have all of those. You will have this Excel. So all what you have to do, and I mentioned what the yellows where you need to add the numbers. Here you didn't need to add anything, but take these tables and put them in the report. I'm done with the analysis. I'm just gonna go and review everything we did. We're talking about crypto outline, the outline of your crypto investment philosophy and trading strategy, coin analysis, all the coins analysis, home run coin empirical analysis only for the coin that you invested most, portfolio analysis, I explain it, and your recommendation, lessons, and mistakes you learned. Investment analysis, why you invested, what type of investment you employ, trading strategy, how do you trade, what trading strategy you use, explain some trades. Coin analysis, for each coin you explain why you invested in this coin, when was the ICO, and with the type of blockchain and other things if you want to add. Home run coin analysis, you explain the political sensitivity for this coin, only the one coin, the one with the most invested. A key feature of the coin, momentum, random walk. We did that in the homework, investment, gold, the movement with gold, inflation, money supply, and regulation. So this, and this, you all done it. It's just you have to put them in a report. The only thing you did do is the portfolio analysis, and you have to do these three things, and then lesson and mistakes. And as I said, you will have this Excel file with the 3 spreadsheets. You take the tables, you put them in report, and you should be fine. If you have any question, let me know. I think I have everything. I talk about it. Good luck with your final report.